Good morning, Steve Reed in Chicago with the morning grain comments. Markets are mostly lower. Today is election day for the midterm elections here in the U.S., so volume is expected to be relatively low. I think big picture wise, we're still looking at U.S. soybean export inspections to date running 10% behind last year, and not seeing a lot of new Chinese demand with their COVID restricted lockdown. We also note that in October, China imported 4.4 million tons of beans. That was the lowest October in 8 years. So from now on, they need to import about 8.5 million tons of beans to meet the USDA's goal of 98 million tons. So I think that number could be lofty, and the USDA could tomorrow lower U.S. bean exports. In the baseline numbers, the USDA shows a relatively large increase between now and 2032 in U.S. yield. They also have the demand going up, and so the carryout stays around $2.15, but prices drop from $14 on farm now to $10.50, $10.30, and so that's negative, I would think, to net farm income. Over in the corn, still tale of two basis levels, with domestic basis levels strong, and also the export basis weak. Our exports are running over 20% behind a year ago. Commitments are 53% behind a year ago. Ukraine and South American corn prices are all below U.S. Interesting, in the baseline, USDA's got yields basically in 2023 on a national average going up from 180 to 199. They do show increase in feed and residual, which you would expect with a higher crop. The carryout goes up to 2.7 billion, and farm prices go basically from 680 down to 450, which is also negative. The interesting thing in both corn and soybean baseline numbers, USDA shows very little increase in both ethanol use and biofuel use. And for soybean oil, that's kind of interesting considering all the capacity that's being added, and that B100 can be an alternative to higher diesel fuel prices. Over in the wheat, we're still watching wheat export pace out of Russia. Looks like right now the latest data showed they shipped 4.4 million tons of wheat. On that pace, they definitely could reach the USDA's goal of 42 million tons. Some people think it could be 44 to 47. Now Russia cannot supply the whole world with wheat, so the Argentina crop is down, Australia quality is down, and U.S. Southern Plains remains dry. The USDA did show a slight increase of 2% in the good to excellent category to 30, but we're still behind a year ago. So all in all, I think that wheat prices continue Kansas City in this broad trading range between $9 and $10. And it's going to take bad weather to break out on the upside. And good weather could push us down into the lower end of the trading range. USDA did show an increase in yield between now and 2032, a slight increase in food use, slight increase in exports, carryout around 775, and wheat prices down into the 450 area. As always, these are my thoughts and not those of ADM.